this industry for a long time. And so if there's some other topics that you guys would like to talk about after I give you this idea of this markets wiki concept, which is gaining some interest, and I want to share it with you all, and I want to get you all to challenge me a little bit on it, because it's a very interesting idea, and I want you guys to think and come up with some questions. I started in the business, in the futures industry, as a runner at the Chicago Board of Trade in 1977 in the grain room, and the hot place at the time was the Treasury bonds. Treasury bonds opened right after I got there in August of 1977, and it was an interesting thing to witness because most of the primary dealers did not want small local traders at the Chicago Board of Trade making markets in treasuries. And today there's a number of us trying to allow the smaller trading companies to get in to make markets on these swap execution facilities, because we believe the smaller firms, if they get in there and make liquidity on the swap execution facilities, on these SEFs, that it'll really increase the liquidity. We were just talking about it outside, and the late 70s brought about tremendous liquidity in the Treasury futures, and that shrank the spreads and in U.S. government securities markets, which allowed the government to borrow lots of money. And so it was interesting to witness how quickly those markets grew in U.S. government securities in the late 70s and early 80s. And then, of course, those markets thrived, and I, with a partner named Ralph Goldenberg, opened an FCM in 1985, January the 1st, 1985, called Goldenberg, Hehmeyer and Company. And our business was clearing trades for local traders and for a book of ag hedging business. And that was certainly something that got me up early and in there late every day, because the risks of that were great with those booming markets of pits with 500 people in them. And that market really thrived. And then in the 90s, we began a proprietary trading with a mouse and clicking with a mouse, particularly in the off hours. And that took off. And of course, then in the mid-2000s, the automated guys did to the click guys what the click guys did to the floor guys. And we sold Goldenberg, Hehmeyer and Company to a company in Dallas called Pinson. And I was the CEO of the futures company for 3 years. That was part of our agreement. And so, and then when I left, we had hoped to have $1 billion in SEG, and we had grown it from 70 million to about 900 million, and we were really on a great trajectory. And Ralph and I still owned the proprietary trading business. And so I went to go back and run the proprietary trading business, and wished them well and really thought they were on their way. And the guys in Dallas made some stupid decisions at the parent level. And so what was the FCM at Pinson now is part of KCG, now part of Knight. And so one of my roles to this day is to serve as an advisor to KCG. So I've been in the FCM business for almost 30 years. And the FCM business, of course, the FCMs, the number of FCMs have shrank because it's become more capital intensive, and the FCM business is also so heavily regulated, as it should be, with a couple of the spectacular bankruptcies that we saw in the last couple of years. So my experience in the FCM business, and then in the trading business now. In the proprietary trading business, we used to really worry about clicking with a mouse, and now I spend most of my time talking about which computer language we're writing the code in, and how fast and what the latency is, and of course all the things that you guys, mostly in the audience, probably know all about. And the progression of all of those phases of the industry that I've witnessed, and that you guys, of course, are familiar with, has brought me to a conclusion that we've come full circle in the exchange space. And the period in the early 2000s when the exchanges demutualized, and that was a very good thing for the owners, the members, the demutualization, which allowed them to monetize their investments in the exchanges. And the exchanges at the time didn't have any money. I was also, along the way there, the chairman of the board of the Board of Trade Clearing Corporation, which held the money, as some of you might not know. The Board of Trade in 1922, I think it was, created a separate corporation after a scandal that would hold all the money. It would be owned by the clearing members, and the clearing members would have the risk of default, so that the Board of Trade would be immunized from a financial problem that would happen in clearing. And in the early 2000s, the Board of Trade Clearing Corporation, after I had left, was toying with the idea, because it was an independently owned utility, really, independently owned by the clearing members. They were toying with the idea of clearing trades for Eurex US. And of course, the Board of Trade was incensed by that. Here is a competitor coming into the US, and their own clearing organization was going to clear the trades for them. And so Bernie Dan and Charlie Carey made the decision to move all of the clearing to the CME, which was the right decision for the Board of Trade at the time, because that was sort of game, set, match with the direction of whether the exchanges were going to merge. Once the CME had control of all of the clearing, it was only a matter of time before it was going to end up being owned by the CME. And the CME guys did a terrific job of taking all those exchanges public, and of course buying out the Board of Trade, and Sprecher came in at the last minute and ran the price up, which was great for the members. So my thing is not to criticize any of those events that took place. All those people worked hard, and it's stressful periods, and like I said, the members made a lot of money out of it. And the CME ownership and the management, and the management at the other exchanges around the world and at ICE, those guys have done a terrific job in running those businesses, and I compliment them on it. Having said that, in the securities market, we all know Flash Boys has brought a lot of focus and notoriety to the executions in the securities markets, and I'll talk about that in a second, because there are lots of differences between securities and futures. And on the futures side, one of the most important things to keep in mind is that the real value, the real keys to the kingdom, the family jewels, is in the clearing. And so, and the CME guys know that as well as anybody else out there. That's where those margins come from, because they have the open interest. And they own the open interest, or I maintain that the participants own the open interest, but the CME maintains that it owns the open interest. And that is really the essence of what we're talking about. And the question is whether or not an exchange, and then you'd eventually get to open clearing. And so, and let me come back to that, but whether an exchange can be not-for-profit, have it wiki governed. And by wiki governed, Wikipedia has got a structure that allows for it to very rapidly make decisions, so that if somebody wins an Academy Award and does something on stage, very rapidly, it's all automated, of course, decisions like that. Very rapidly, it can be posted on Wikipedia, and it's got to be done in a way that is, the actress, for instance, may want it to read a certain way, and her family may want it to read a certain way, and then the television people may want to read a different way, and so they've got to very quickly come up with a decision as to how to write that. I'm just using that as an example. But the point is that the tools today, the social media tools, allow for the decision-making process to happen globally and very quickly. And so with an exchange, and in my experience, we had to all be in a room with the Board of Trade and the Board of Trade Board of Directors room to make decisions. And the decisions, of course, had come through the committees. So whether it was a decision about what was regular for delivery, I learned more about being regular on the Board of Trade board than I had ever thought I would. But whether it was a warehouse was regular, or the cheapest to deliver in a bond, or whatever the decision was, it would go first to the committees and get researched, and then it would make its way to the board of directors. But it was the participants in the marketplace, because it was mutually owned, it was the participants that really had input as to what the right decision was, and maybe it was which months to list in a commodity that had certain delivery periods in the year that were crop years, for instance. And so you had commercials, you had speculative interests, you had market makers, and you had brokerages. And all of those groups, each were represented on the committees and at the board of directors to ultimately get a decision that was made. And the decision was made in what was best for the marketplace and all the participants. There were certainly arguments over some of the decision making, but the decisions were made for the participants and not just for the institution. And so when I say wiki governed, this thing would have a governance structure that would allow for debate at committee levels, depending on what the issue was, and issues of matching algorithms, whether it's first in, first out, whether it's a distributed match algorithm, whether it's implied spreads. All of those type decisions, in all due respect to the CME today, are mostly made with regard to what's best for the CME, not what's best for the participants. And so the governance structure as envisioned for this wiki exchange would be one where it would be open governance as much as possible to allow it to be transparent, although some decisions are going to have to probably be made without it being public. But structuring a governance for something like that would not be difficult. So it's wiki governed. It would be open source. So the matching algorithms and the trading software would all be available to the public, and you would have global input as to innovative ideas on how to do it. Now, this exchange would also obviously have to have budgets and finance, just like Wikipedia does. It would have to finance the technology and finance the data centers and the security, and it's going to have management. It would have to have a budget, and again, you're going to have committees that would approve a budget. So you've got open source, wiki governed, and then last but not least, the data that today, again, in all due respect to all these for-profit exchanges, the data today is just used by them to try to determine what's the most profitable to the exchanges. Not a criticism, don't blame them at all, I'd be doing the same thing. But what I propose here is that with a open source wiki exchange that's not for profit, that it would be able to distribute the data. And of course, we're not talking about the anonymous data that would have to remain confidential, right? And you've got security issues there. But most of the data and how much is getting done in certain prices, that data could be shared with the participants. So really what we're talking about extracting is, we're talking about extracting the margins for the exchanges. And in the futures world, the margins are really high. It's we've heard the criticism that ICE, when they bought the New York Stock Exchange, and Euronext, the stock exchanges, will have to spin them out because the stock exchange's income is dilutive to the derivatives income, and that's all because of all that value in the clearing. Okay, back to clearing. So how are you going to clear this thing? And that's a very good question. And my thinking is that if you created this exchange, and I think it's probably in talking with some of my friends, some of my crazy friends in the futures business, and some of these crazies get very enthusiastic about this. Blair Hull gets very enthusiastic about it. Harris Brumfield, I had to tell him to sit down. He started jumping around the room. We got to do this. And so Harris, with a number of the trader guys that are out there that I've kicked this around with, back of the envelope, we think it's probably in the neighborhood of $10 million to get it up and going. We can outsource a lot of the technology to get it to get the thing going. And then it's going to need a budget to go forward. Now, the clearing, I think, if we got the momentum to get this thing started, and it's obviously got a lot of, I say obviously, it should have a lot of interest from the banks. The Wall Street banks are skeptical of the power of the exchanges. They worry that the exchanges go directly to their biggest customers, and they feel that they're getting disintermediated in their relationship with their biggest customers. And this would be something where the banks would have a lot more input. And I have to say, in my experience through the years, whether it's any one of the groups that I mentioned, the banks, for instance, and the brokerages, if they're the ones that create the exchange, the market makers, locals, and traders are going to think the thing is rigged for the banks, and usually it is. And not to pick on the banks, it's the same thing with the market makers. If you just allow the guys who are making markets to set the exchange up, it's going to mostly be slanted towards them. And it's got to be all of the participants in there together. It's like an ecosystem, and it's going to challenge, it's like a bee and a flower, right? It's going to challenge each other all the time, and you've got to have all of the participants in there to be able to challenge each other as to what's best for the, at least for what's best for the market, at least in my experience. Because that's the way it worked at the Board of Trade back in the day. And it worked pretty well. Like I say, there were arguments. Back to the clearing. If we could get this going, I think it would get political cover, because it's a pretty good idea that I think public officials and such could get behind. And so I've been to a couple of the clearing organizations that are out there, and there have been a number of attempts to start futures exchanges, I think, as we all know, in the United States and in particular. And most of these have not done particularly well, and they've tried to go at one of the big exchanges, a certain product with a big exchange, and they've not done well. And that means for the clearing organizations have spent a lot of money to try to get the thing up and going, the new futures exchange clearing, and then ended up with no business. And so my response to that is that all those futures exchanges, for the most part, in my opinion, have just been versions of the same white paint, right? And so, not to pick on any one of them in particular, but whether it's Howard Lutnick and God bless him, or this exchange or that exchange, it's mostly been about just somebody else wanting to make the money. This is different. This is for the participants. Again, this is not something where it's a group of guys. I have read, like most of us, we've read Flash Boys, and the idea of that new exchange that's got delays and mostly for the buy side, that's great. Those guys own that exchange. It's really just about them making the money. And what I'm talking about, I think, could also work in the securities markets, and the participants would be the ones that would have the interest in this thing, because they would be the ones running it. It would be there to serve them, and it would be there to facilitate all of the activity, not just a certain group. So given that we could get some political cover with this, I'd like to believe that they could then move, that one of the clearing organizations would be willing to clear it, and the possibility someday of the idea of opening up clearing at the current futures exchanges. And I understand that the CME would say, no way, no how, not ever, Chris, in your lifetime. And I get that, and I understand it, and they're right. If I were in their chair, I'd say the same thing. And Leo, nobody gets it better than Leo, and he over Leo's dead body will they allow to have fungibility in futures. And I get that. They would go to the wall because they know that's where the value is, and I got my CME stock, and I think they're right. I just tend to think that it might be time for an open source, not-for-profit wiki exchange. So with that, I'd like to ask you guys to challenge me with some questions. So give this just a little thought and see if you can come up with some questions as to why this won't work. By the way, I've been to I'm going to the IFM, the Institute of Financial Markets, to talk to them about the possibility of funding a study, so that we could really come up with a budget, what we think it would cost, what we think the realistic ongoing budget would be. You've got to pay senior executives to run it. You've got to, again, you got to have security, technology, data. Aside from the software, you got to have hardware. So, and running HTG these days, the trading business is, as we all know, very competitive. Has not been easy. So I got a full-time job, and so I'm trying to get people to help me with this. Sir.
In an electronic environment like this, how are you going to keep a handle on this cross-border and cross-regulatory, in a wiki worldwide environment? How do you hold all the pieces together internationally?
International question's a very good one. And it's because this, I gotta think about that, but it's gonna be, it's gonna want everybody to be able to participate no matter where they're coming from, but you've certainly got CFTC issues there, right?
European issues, CFTC issues, Asian issues.
Well, you mean for for a European trading company to come in and trade, or?
Who passes from London, New York, Chicago, San Francisco, Hong Kong? How are you going to hold it?
Well, it's going to be just like CME today, right? CME's open 23 and a half hours, and I'd envision it being the same way. It'd be, in my vision of it, it'd be a U.S. exchange, a U.S. company. Of course, there are other venues that would be possible, other jurisdictions that would be possible, but I think it'd be open just like the CME is today. It'd be open 23 hours a day. You'd have to have some time to close, settle prices, reopen. So I don't think that's an issue. It'd be open like CME is, right? But you certainly have got issues of whether foreigners can trade the products and such, but I think that would be all right.
Chris, have you given any thought to what this entity might trade that hasn't been traded up to now, that there's an unserved need for? Or do you start cloning existing futures products?
That's a really good question. And I think, of course, if you had a board of directors formed, if you got a group, if you could get to a point where you had a group together that could get together in the room and debate that issue, which would be the sort of first order of business. I think that, of course, ICE won that lawsuit where they could settle their products at the same price as the NYMEX. And so based on that, my feeling is, because you don't have fungibility in the beginning, you probably have got to pick products that are easily financed, where you can get margin finance from the banks. And the FCMs do a good job with that in crude oil, right? And so I probably, like a number of people in this room, we trade crude oil products at ICE and CME, and our FCM lends us the money to post at two different exchanges. So my belief is that we would do that with, we do it basically with lookalike products, and I think there's some innovative ones that are cash settled to make sure that you aren't stuck in a Roach Motel, that you can be able to get out of it. And it's got to be in something that the FCMs can easily finance, just to try to get some traction. Now, of course, the attractive piece for this, for the high frequency firms, which is, as we all know, a term that everybody throws around without really understanding exactly what we're talking about, right? It's mostly just low latency firms. But the market-making firms, I think, would be really attracted to the pricing. The pricing, it's the pricing and the data that's going to be valuable to the market-making firms, and that will attract other bigger fish, the customers, the buy side, I believe. So my own feeling is a product that's easily settled in cash, that you settle to somebody else's prices, and that's easily financed for the SCM, the margin. Good question. Stump the band. I've said to a couple people, I've brought this out and talked to a few people about it, and said, I said, being as busy as I am, this one guy said, somebody's going to steal your idea. I said, please, dear Lord, somebody steal this idea and run with it. That's exactly what it needs, is leadership. To go visit the top 20 banks in New York. Typically, most of them are all big offices in New York, and try to make sure that they're convinced, and they're all busy. They got their own things. We're talking about a relatively small amount of money. If you look out 10, 15, 20 years, if you take those margins out, again, I'm thrilled that the CME has the kind of margins that they do, because we have our stock like everybody else. But if you look at the Crane's Chicago business list of businesses, I think there's, 300 public businesses in Chicago, and you look at the profit margins, they're 12%, 9%, 16%, -2%, 60%. It's like, whoa, what is that? CME. You know, they have and God bless them, they have huge margins on that business. And so the only way that I can see, rather than somebody else coming in and trying to compete with the same with another version of the same white paint, I think that will be very difficult. Now they talk about how ICE is very competitive with them, and so is Eurex. I just think this would be a different approach. This would be something that would really cause real competition in the exchange space, because it would be for the participants.
Chris? Hey, Chris, right over here.
Oh, sorry. Yes,
Yep.
Phil.
Curious the origin of your idea, the genesis and the mover behind it, and I think you just answered it at the end of that last your last sentence. But it seems like is it policy? Is it control over governance, or is it a financial consideration in returning some of those margin that the CME makes back to the participants?
Well, certainly the long-term policies are, I think, are better driven long-term by the participants making those decisions in a truly competitive market, rather than the model that we have today. And so it's, I think the competition drives innovation, and if the participants have got there, and so that's why I wanted to compete with the big for-profit exchanges. And I believe that it's the tools, the social networking tools and such, and open source software that allows this now to start to become ripe, right? You know, it's taken 10 years since the exchanges roughly demutualized for these technologies to come around to where the thing could come full circle. So I think it's the technologies that allow that. Little HTG, we've got $17 million in capital. We paid CME last year $7 million. So the money is, you know, so anybody can say, yeah, well, that sounds good. It's really the money, and I guess I'd have to agree with that. The money is a lot of it. It's not. You know, our FCMs are incredibly competitive, right? They come and we arm wrestle. They recently wanted to raise prices, and so we went to the mat with knives and biting each other over 1/4 cent. The CME raised the prices 10 cents. It's like, have a nice day. So I think that that competition would be very healthy for the exchange space. And so I think it's both, is the answer to your question. I think the money drives it. They need competition. I think it'd be healthy for them, but I think long term it's in the decision making.
Quick follow-up. So on the policy and on the direction of the exchange, is there an example, without getting too granular, of some sort of policy on one of the exchanges, whether it be CME or ICE or otherwise, that you can identify that you didn't agree with, or that your peers in the low latency market making arena didn't agree with, that you would have liked to effect a change on, and that would be something that would be in part of your wiki exchange?
Well, there's a couple of issues that I think could be better debated. And when I say better debated, the CME does a terrific job of getting around to their customers. They do a great job of that. Same with ICE. And the CME people discuss things with us, and I do find them responsive in getting back to us if we've got some issue. But the debate over order types, you know, there's in the securities world, there's 100 order types, and just to point to the securities world, and I don't feel like the buy side has had as much input into that as the decision making for the profit of the exchange. They thought it was a great idea to have 100 different order types, and they've got a constituency that pays them lots of money that really want all those order types. I think at CME it's something like 25, and so and don't quote me on that because I could be way off. If Gil was standing here and he said, "Chris, you're way off, it's 10," I certainly wouldn't disagree with him. But the debate over order types is one where I just don't feel like the buy side and the brokerages have really had a fair amount of input. And that's mostly because it's just driven by the profits of the exchange. If there are a bunch of order types that aren't good for the marketplace, different types of order types that the public might view them as somewhat abusive, that isn't getting debated any other than somebody calling up the CME or whatever exchange it is and saying, I think this order type is abusive, and the exchange saying, yeah, well, thanks for your input, but we make a lot of money off of it. I mean, thank you for your input. Goodbye. And so I don't think the debate is one that is as inclusive with the participants as it could be, because they're driven by their profits. And again, God bless them. I'm not here to bemoan that or criticize them for it. They should be doing that. And I think they do a great job at it. I think the leadership over there has done a phenomenal job of building an institution that's Chicago's very proud of, and we should be. I just think it needs competition.
Great. Thank you, Chris.
Sure, Mike. Thank you. Come up and see me afterwards. I'll be happy to talk about this some more. Again, challenge me on the side. I need your ideas because I'm sort of walking around talking about this, and I know it's a little bit out there, and I want you to digest it a little bit, talk about it, and let me know if there's something that a question I can answer. Paul.
Got the mics.
How did I do? Did I say anything bad about the Board of Trade? No, it was all beautiful. Okay, thanks.